A move from IG Market. Stan, thanks for your time. What a sell-off just in the past couple of hours on Wall Street. What do you put it all down to?
Morning. Well, it has been largely pinned to those comments by US President Barack Obama suggesting that he will continue to push for these tax hikes on the wealthiest Americans. Unfortunately, that's not what the Republicans want to hear at the moment, and it might cause further tension going into these negotiations. So it does seem like most of the sell-off has been attributed to that, but there have been a variety of factors weighing on risk assets over the past 24 hours. We've had some poor economic data out of Europe. The US also had poor retail sales numbers earlier on. And of course, we did have those FOMC minutes which failed to really inspire. They just generally echoed the same comments we heard from the Fed member Yellen yesterday, just suggesting that they might look to quantify certain aspects of the economy, like employment, as opposed to just setting a target date for quantitative easing. So that was fairly dovish, but still failed to inspire any major rally. We did obviously have those comments from Japan, where the Prime Minister decided to dissolve Parliament, and this did see the yen sold off dramatically, with the dollar yen pushing through that 79.60 level all the way up to 80.31. We also had a sharp sell-off in the Aussie dollar after the current PBOC governor wasn't named in the new list of the Communist Party, which was released yesterday. That was quite negative for the Aussie dollar. Of course, it does bring some uncertainty to the region, particularly with the Aussie dollar being so dependent on the Chinese economy. It does have a significant bearing going forward. We saw the Aussie dollar sold off from, I think, 1.046, trading at about 1.037 the last time I checked, and I think it actually slipped below that level. So that's quite a drastic sell-off, and it might have a strong bearing today on local equities, as obviously it's generally its strength is quite negative for the local stocks.
Yeah, absolutely. And speaking of which, what we should be expecting at the open is really anyone's guess. I'm looking at BHP and Rio, both down more than 2% in London trade. Then we've got that sharp last-minute sell-off on Wall Street. It doesn't bode well for us, does it?
No, not at all. We're currently calling the market down around 1%, so that leaves us at about 43, 42, and that's just below that key support zone at around 43.50. So there will be a lot to look out for in terms of value buying at the moment. The market had a big run over the past few weeks, so this might be an opportunity for some investors to get involved. But of course, it will be nervous trading indeed, because with such a sharp sell-off that barely got a break in the last couple of hours or so, it does seem like we could see some sort of skepticism around investors, and some investors continue to be on the sidelines until we get a definitive solution on this current negotiation with the fiscal cliff looming. But we might see some sort of boost for the energy stocks. Of course, we did see that spike in oil prices. Energy stocks have been doing pretty badly this week, with those cost blowouts for LNG players being highlighted by a lot of analysts. So that might make for an interesting trading session. We also have some earnings from the likes of James Hardie, Grain Corp, and a sales update from Maya, so that might be something to look out for. But with the overlying sort of underlying global macroeconomic issues, it does seem like that's where the focus will remain going into today's session.
Yeah, absolutely. A big few hours leading up to the open for us today. Stan Shamu from IG in Melbourne. Thanks for your time. Let's move